Good morning, friends and family. It is time for the market forecast for Wednesday, November the 11th. I'm John Hoagland. Thanks for trusting me with your time. Happy 11/11. Today is Veterans Day. My dad was a veteran. We all know that our good friend Dan Hodgman is a veteran of the Marines. Thank you, Dan, for your service. Make sure you say a prayer for veterans and thank the veterans that you meet and that you know for the sacrifices that they provide, and the safety and freedoms that we provide. Thought maybe I'd show a picture of my dad here. This is about 1945. He was in the Navy, never was overseas, but still a veteran. And thank you to all veterans as always. As far as the markets are concerned, Veterans Day, there's no major releases today. As always, we're going to be looking at these markets in context through the lens of risk management. That's really what our job seems to be, is more than anything is learn to be a good risk manager and then manage those profits. Those profits tend to take care of themselves. As far as news is concerned, the major U.S. indices are back on the upside today. COVID vaccine hopes, even though infections are surging in the U.S., there's a lot of hope riding on these vaccines, and hopefully they are going to be what we hope that they're going to be. Of course, tech stocks back up. Perhaps on a little bit more solid footing now. So that tech route, we're going to see that in the chart shortly. Seems to be over, at least for now. Many of these markets seem to be, as Dan would say, hung over. They had a pretty big route a couple of days ago to the downside. So yeah, they may be a little bit hung over. Crude prices have walked through resistance after the API announces a 5 million barrel draw, a surprise draw. We're not going to be able to have our information from the EIA today, as because it is Veterans Day. It's going to be tomorrow. Nat gas will be on Friday, so we're going to have to wait for that information. However, the OPEC monthly report came out this morning. I haven't had a chance to look at it yet, but they may shed some light on their ideas as far as supply and demand for the coming month. The VIX down another 3% today, down at last I checked at 2407. Dollar index continues to leak a little bit higher at 93.07. Make sure you like, share, comment, question, feedback. Heckling is always welcome, and I do enjoy a good heckling. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. I want to welcome everybody. As always, I like to say hello. Hang on one second. And we have Charles March first in the room this morning. Charles, you win the prize. Tanya, good morning. Murph, another great day in front of us. We certainly hope so. Felix, Danielle, guten Tag. Esteban, France, Laura, good to see you. Kevin, good to see you. Michael, good to see you. Subconscious, Ben, KJ from Poland, happy Veterans Day. And thank you for that. Vast West, James, good morning. Roman, Mike, Rodan, and Vladislav, good morning, and good morning to everyone. All right, so what are we looking at this morning? Well, we've seen the crude market break through what we were looking at as possible resistance from the high end of a previous balance area. Why don't we go ahead and take a look at that right now? Take a look at these charts. Starting with the daily in crude, as always, just from left to right. Here we go. All right, let me get my notes here. All right. Okay, let's go to the daily. It looks like we've left our opening range at the low of the session here. That might be information we can use. Here's our move to the upside. Vaccine optimism has sparked possible future demand. The API, again, a 5 million barrel drop. That was a bit of a surprise that has helped the market get through this 41.50 to 42 level. All of these highs here, we were looking at possible resistance And we've broken out above those, unfortunately, in the overnight session. So we were probably unable to really participate in that, unfortunately. The OPEC monthly meeting report drops today, so haven't had the chance to see that yet. But we're going to be trading what we see, more important than what we read in any monthly report. Volume has slowed to the upside a little bit, but we're still seeing some pretty decent increases in open interest. This was a 10,000 contract increase in open interest yesterday, a 24,000 estimated increase in open interest. So a lot of money coming into the long side here. As long as we can hold up on volume and we keep bringing new buyers into this marketplace, I see it very easily reaching up to this big fat round number of $44, right up near all these highs in the near future, should the market continue to kind of put forth a healthy upside auction. Taking a look at the 30-minute here, okay, we've got settlement down here at 41.36. We've overnight traded through our kind of assumed resistance area, okay, which was around $41.50 to $42. The market grinding through there, getting up above $42, accelerating. We've got some longs in this market, but we've also broken out of an area where we're thinking we may be bringing longer term traders into the marketplace to need to, want to, or have to adjust inventories. We've left our opening range. I'm going to call it right now. The low of the opening range here is 42.22. So I'm going to put a little line there so that it's a reminder. If we get back to that area, it might be somewhat impactful. So there's my little low of the opening range, low of the regular trading hour session mark there. It's this maybe indicating that we are attracting more buyers, sometimes higher prices, and and buying begets more buying. That may be what's happening here. And again, we've got a little bit of a stutter step up here at 43.50, which is a previous weekly kickoff level, but the big fat round number of $44 seems like a more of a visual opportunity for us, if you were to ask me. So already seeing buyers in control of this market. Don't try and fight this without some sort of structure. Maybe we're going to target our double top here, which is not necessarily a strong end to an upside auction. This is a weak end to an upside auction. As a matter of fact, it kind of indicates that the upside auction may not be over. So, but it is the overnight high, might provide opportunities for us if we get the chance to see an opportunity down between these two levels here. It's a pretty big zone. It's going to be kind of tough to try and negotiate those levels if we even get there, but we are going to be looking for opportunities in the direction of the gap, which would have us looking for longs. Don't just pile in. Look for an opportunity to buy a weakness in crude oil today, perhaps a move back down towards that opening range, or that $42 level might be that opportunity for us. Here is the S&Ps. Volume was okay yesterday. We still see a lot of open interest piling into this market. Healthy for the upside auction. We saw 27,000 on Monday. Yesterday we saw, we saw 27,000 yesterday. We saw 32,000 additional contracts. So there's a lot of eyeballs on this market. There's a lot of money recently put at stake. We kind of were assuming that we were maybe hedging or getting out of positions before the election. A lot of money coming back into this market, suggesting a healthy upside auction. The market is continuing to move higher. More interest in continuation in that market moving higher, and we held up volume relatively well yesterday. We didn't really get too directional. It was more of a, as Dan would call it, a hangover day yesterday. So here's what we did yesterday. Basically, we settled right on weekly kickoff high. So 35.41 is settlement. It's also the weekly kickoff high. The market wrestling with this area for quite a while. from the night before last, yesterday. It's been magnetic. Now we're going to be opening with a gap above. We mentioned yesterday, I think, that there was the possibility of yesterday becoming a type of repair day where we closed this gap. We traded to maybe point of control from yesterday. We didn't quite get there. That might be important information for us. And then now we it seems as though we are intent, or at least attempting, to get up to this point of control. One of the things that I'm really kind of focusing on, maybe fixating a little too much, is the fact that we put in our all-time high in the overnight session, just before the regular trading hour session here on Monday, but still the market put in an all-time high on low volume. The market tends not to like that, so I'm looking for an opportunity to see this market get above this level or retest this level in the regular trading hours. Market tends not to leave recent highs or all-time highs in the overnight session. So we've got support level, possible support level. It was sure magnetic for the last 24 hours, maybe 36 hours. We're opening with a gap. If we can't close the gap, I'm going to look for opportunities in the direction of the gap. I still think we're in a repair kind of mode. The market really kind of hung over from the energy it expended on Monday. Are we going to continue that energy to the upside now? Watch the overnight high. We've got kind of an unfinished upside auction in the overnight high. At the overnight high, watch the opening range may be an opportunity. It's been kind of thin as far as how often the opening range has been providing opportunity for us, but whenever we open out of range from the previous day, the market is considered out of balance. And just like in crude oil, we may see an opportunity off that opening range in our equities today, in the E-mini S&P and in the Nasdaq. Yesterday's gap fill, we talked about this gap. Well, we filled that gap yesterday. It shores up weak structure below the price, below the market. So this move down to close that gap, or even to get possibly back down to this point of control, is a healthy action of the market. The market doesn't like to leave holes, doesn't like to leave gaps. And gaps will, technically, eventually, for the most part, be filled. Well, we filled it yesterday. We filled it quickly. The market seems to be heading back to the upside. I'm looking at this move to the downside to close this gap as a positive for continuation to the upside here in the S&Ps. Now let's take a quick look into the Nasdaq. Okay, so open interest and volume in down momentum in the Nasdaq. It's a little bit different than the S&Ps and the other equities. We've seen the Nasdaq coming off a little bit. Perhaps it was overdone. Lots of speculation as to why this market has headed the opposite direction. We still have a little bit of that divergence going, but we are finding support at weekly kickoff low, 11,500. We got, within 25 points of it yesterday in the overnight. We have an inside day. The market probably doing a little bit of digesting over the direction and the energy that it has expended in the opposite direction over the last 2 days. Finding support at weekly kickoff low. We added 10,000 in open interest to the downside. The day before that, we added 5,200 in open interest to the downside. So doubters coming into this market, eventually, one way or the other, the markets will right themselves, because they're the same asset, just different stocks, right? The tech stocks took a little bit on the chin here. We're going to see if they can recover some of that today. Here's the 30-minute chart. Here's our move yesterday down to 5,500. The Weekly kickoff low. Here's our overnight attempt to get back to that level, basically closing off at value low from regular trading hour session yesterday. Settlement is up here at 11,618. Maybe we've got some longs here. Doesn't look like we're going to be opening with a gap. What I would be interested in seeing is if the market can close the gap from yesterday's range to Monday's range. That gap remains unfilled. I'd like to see that gap get filled. And again, today, where we are between points of control from yesterday and Monday. This may be another opportunity for a repair day. So pay attention when the market gets to point of control down here, or if the market really rejects range from yesterday, closes this gap and reaccepts inside the range from Monday, I'll be looking for a continuation back up to this point of control and perhaps another test of weekly kickoff high. We've really kind of enveloped the opportunities between weekly kickoff high and weekly kickoff low so far this week, Monday, Tuesday, basically around the world. And so watch those overnight longs, watch the opening range as well, even though it doesn't look like we're going to have a gap and we may be opening inside yesterday's range and value. Little slight indication of possible imbalance here. Okay, so gold. All right. Gold is also reeling from recent activity. It's showing it's probably a little bit hungover, as Dan calls it. We've got really just another test of a previous weekly kickoff low down here. It was 1855, I believe, is that level. We looked at it on Monday. We looked at it in the overnight. Really just still kind of running in a dead cat bounce from this move to the downside. The move to the downside Monday removed 11,000 in open interest. Yesterday we removed another 8,200 in open interest. So it's not like there's a whole bunch of new business coming into the short side here. It just seems like there's an adjustment in moving from risk off to risk on assets. Take a look here at the 30-minute chart. So again, in a bit of a possible repair zone here. The market opened here. The opening range remains the high of the regular trading hour session. It took a look down here towards this point of control, found possibly some support. I'm not necessarily sure that the downside is certainly in this move to in gold, but it's getting close to some support areas. If we do put in this low here, again, we have a possible repair situation. We may take this market back to point of control from yesterday, which is 1879 approximately. Settlement, just for your knowledge, is 1876.40 in gold today. Pretty decent opportunity this morning off of that opening range trade. Now to the currencies, and then we can get down to business. The euro open interest increases off of recent highs, adding 1,400 here, adding 4,700 yesterday on a doji kind of a day, but off the highs we're increasing in open interest, indicating that the downside auction that began on Monday is probably not over. We've taken the market now below weekly kickoff low. We've got a previous weekly kickoff level down here, which I think is still 1645 even. The market really is range bound for since this summer. I mean, we've got these highs here, we've got these lows here. In the bigger picture, this is really just a bigger time frame range, and I'm starting to believe that we are losing some of our longer time frame interest in this market and really kind of focusing on shorter time frame traders trading this market. The US dollar continues to creep a little bit higher off its recent lows. Let's take a look at the 30-minute chart here. Okay, night before last, weekly kickoff low was pretty supportive. We had a pretty decent move to the downside, support there. balance. Market now out of balance, looking below this important inflection level. I don't want to fight this move to the downside. The opening range was neither the high nor the low of the session. It's a little bit tricky, but the market is out of balance for the short time frame activity. Again, we're seeing more open interest as the market continues to move lower, which is encouraging and healthy for the downside auction. So I'm looking. If at gap rules as usual, if we can't close the gap relatively early, we're going to look for opportunities for shorts. Be smart, be patient, wait for the market to show, even an inclination of strength, perhaps a move back to this weekly kickoff level. Would that be too much to ask for us to have that opportunity to see if? I'm hoping so. All right, if it doesn't happen, that's okay. More opportunities will arise. Don't go looking for trades. Trades will find you. All right. The Japanese yen, it continues to test this trend line. It appears as though we are working on a possible day that we may begin to accept below that, which is going to be the first step in breaking the upside structure that we've been in for quite a long time. We've got a lot of higher lows. We've got a lot of higher highs. We break and accept that level. This trend line, it's going to start to break that structure, and that may create a technical move to the downside. We've got a couple of weekly kickoff levels, or at least one weekly kickoff level. We're just below our current low that may end up being supportive. So this is step one. Breaking this previous weekly kickoff level down here would be step two, and that may create a pretty big opportunity to the downside. We've been losing open interest on this move to the downside instead of gaining open interest. This move and acceptance below here may bring in new sellers. We've been losing longs. We start to move down here, we may start adding shorts to this market. So taking a look at the 30-minute chart is see if there's an opportunity we can kind of discuss about today. So here's the yen. We're kind of holding. If you look at that trend line on the daily chart, it kind of comes across here, and we seem to be holding below that. However, we're not really changing the short time frame perception of value. We're still in the value area that established itself after the big move to the downside on Monday. Was inside that yesterday. We're still inside that today, in large part in extended trading hours. We did not necessarily hold a gap here, but it seems as though this might be a little bit of a target-rich environment. We've got settlement from yesterday right here at 1905. 1907 we have this is previous settlement here. This is Monday's settlement here. Let's call it 94.89. We've got 94.90. This point of control here. We have our value low from yesterday. Just trying to kind of weed my way through this. Not really feeling that there's an importance to hurry up and get into this market. However, boy, if we can't take out these highs, which is I believe where that trend line is coming in the daily chart, I'm going to be looking to see if maybe there's an opportunity there. It is a little bit target rich for shorts because we do have value low from yesterday. We have the settlement from the day before yesterday, point of control from the day before yesterday. It's looking a little bit target rich. Watch these highs up here. At the very least, it gives you the opportunity to limit your risk. All right, so I have, as usual, yammered on perhaps a little bit too long. I want to remind everybody that today is group coaching. I'm going to put the URL, the link, so you can sign up and join us for group coaching if there's things that you have questions about that we don't necessarily have time to get to on the market forecast or recap. It's a great place to come and ask the questions. Again, nobody knows everything. I certainly don't. There's going to be an opportunity to hear what I think an opportunity to hear what you think, and an opportunity for perhaps us to learn something together. I really appreciate these Wednesday sessions. They're one of my favorite times of the week, and I look forward to seeing you there. Esteban has a question. As far as trading volume concerns today, is business as usual, right? I'm thinking yes. The fact that there's not a lot of information due out today might be somewhat, keeping people a little bit on the sidelines. But I'm thinking the volume might be off slightly today, but not like a Thanksgiving or a Christmas holiday or something like that. I think we are good to go. Let's take our deep breath. Stay humble, grateful, and creative in your trading today. Emanu signed up. Great to have you with us. Looking forward to all of your success. Dan will see you at 3 o'clock for the market recap. I'll see you at 1 o'clock for the group coaching session. Get out there and profit today. Trade well. We're just about ready for our equity open. Be prepared. Take that second. Take that deep breath. Do that minute of meditation. Be ready for it. And hopefully you'll have a great trading day. We'll see you out there. I'll see you tomorrow morning if you're not at the group coaching session.